worked upon quickly in the interest of the sector. There can be rationalization for royalty. I think that relaxation on the issue of stacking, especially in Odisha, I think one stack can maximum be 40,000 ton, whether that can be looked at so that that high premium issue can be resolved by a thorough discussion and deliberation among the stakeholders.
Bidyut sir,
Last
your
point is
time is
also
up.
very, yeah, last point, very 10 seconds. I think this is again very, very important, and this is not new thing, but this is high time to focus on this, that in order to focus on mineral, proper mineral utilization, okay, that we have, especially our stock, we need to focus on beneficiation and pelletization, including slurry pipeline infrastructure creation, especially in states like Odisha, so that our conservation and utilization of minerals are actually respected in a much better way. With these, I wanted to conclude my presentation. Over to you, Monica.
Thank you so much, Bidyut sir, for providing iron ore outlook and how do you see the market moving, comparing it with the international prices. We will quickly move on to our next speaker. We have Mr. Pukhraj Sethiya. Just give me a moment. A little introduction about Mr. Pukhraj Sethiya. Mr. Pukhraj is currently associated with Adani as Associate Vice President and Head Business Development for Mining Business. He is responsible for growth and diversification of Adani mining business in India. Prior to Adani, he has worked as director with PwC India and was leading their mining and metal practices. Mr. Pukhraj Sethiya, over to you.
Thanks, Monica. And can you please confirm if my slide is visible and I'm audible?
Absolutely, it is visible to us. And Pukhraj, I request you to utilize only 6 to 7 minutes so that we can have some time for Q&A.
Sure, sure. And in fact, my previous speakers have already spoken so much about the sector and segment specifically on steel, while I will have more of coal to speak about, which is much more affected by power sector than steel alone. So I would quickly finish my thoughts around it. So given very ambitious growth targets with Government of India has capped to 5 trillion, so on, while one can debate whether it's 2024 or 2030 and so on. But one thing is common and consensus are there that we as country are going to see high growth, and so as the demand for steel as well as energy or power will continue to drive, and that essentially will drive demand for both thermal coal as well as coking coal. The fundamentals are strong, no doubt about it. There are short-term hiccups which we are seeing. Despite having huge potential, if you really see compared to our resources, coal resources, our production and exploitation has been quite on lower side. So let's say countries like China with just 20-30% higher resources are producing 5 times of what India is producing, and so is Indonesia producing pretty close to our production despite much lower resources. While there have been consistent growth in the coal production, albeit quite slow, just I think 3 to 4% or so, we have seen downward movement in coking coal production, and that's something which is impacting supply to our steel mills, and that's where almost 75 to 80% of the coal is getting imported. And despite all the claims, efforts which have been made over last 5 years, still our domestic production is falling short by more than 25%, and we are still relying heavily on imports to meet our coal demand. And this 25% is on overall basis. If we see only for coking coal, as I said, we are short by 75 to 80%. And if we really see growth is primarily coming from Coal India, and last few years, captive blocks which were deallocated in 14 and again reallocated and restarted production has started picking up pace, albeit much slower than what was expected. And the imports we can see. However, in recent few months, or I would say 1.5 years, there have been two major events which have led to curtailment in productions. One was the heavy rainfall last year, which reduced the production and supply and disrupted the supply to a number of power plants as well as other users. While COVID, where impact has been more what I understand, supply demand driven. So there was lower demand, and that's where the production and the supplies were curtailed. Still, the supplies were maintained from the stocks itself. So there have been destocking by Coal India, as well as even Singareni to some extent. While we have seen imports have substantially come down over this last period of 6 to 8 months during the COVID time, which resulted in substantial lowering or reduction in the prices of imported coal, plus also still huge stocks available at the ports for the import coal. And that's probably a better part as far as the domestic conditions are concerned, that the prices are lower on the coal side, though we have seen a contrasting story on the iron ore side. However, in future, we see there are number of factors which are going to impact the supplies, and we can see a drastic change if everything goes as planned and all the efforts are in positive direction. We see all the efforts are happening in positive direction. So one significant ramp up plan by Coal India. So while they have target of 1 billion ton in 2024, which each of us may have different view on, but one thing remains that yes, that 1 billion ton is expected to be live. May not be in 24, but 28, 29, one can have its own projection. Switch to electrical vehicles, significant push. So as renewable dynamics have changed, SHR has improved of thermal power plant, and thermal power plants are the largest consumer of the coal. And plus, of course, the COVID impact, which, as my previous speakers have said, it's a still uncertain time. It's anybody's guess when we will come back to the normal of FY20, and then what would be the growth rate. Everybody can have its view, but all said and done, impact is going to remain for a year or two. So given this overall context, and we had our own internal working done, where we see that in case of coking coal, despite all the claims and effort, because of the poor quality, so while mines which are planned to be opened up are more of semi-coking coal, the net availability which can be fed to steel mills, we expect to be limited, and still heavy dependence would be on import coal itself. And prices we have seen on the import coal have been fluctuating every few months, and it's a cyclical. So let me not put my neck out on the pricing side, but one thing is for sure that 75 to 80% imports will continue, and there's not expected to be significant ramp up in coking coal, which can be fed to steel mills from the domestic market. While on the thermal side, given number of blocks which have been awarded to captive users, then recently concluded commercial mining auctions where 19 blocks are auctioned. Of course, the LOIs are still awaited. And the ramp up by Coal India, whereby they have already say offered 7 blocks to be developed through MDO route, and another 7, 8 are expected over next year or year and a half. Given all these blocks, their own production schedule, the status of production, we see still by 2025, we should more or less be having supplies to meet domestic demand. Some imports would be there, which are required for specific plants, say coastal plants or plants which are designed for high calorific value. But where we see that the plants which can take domestic coal would have sufficient supply capacity available. And this too, without taking into account the blocks which have been mined for commercial mining, we see that so capacity would be sufficient. Specific events may determine the actual supply at that point in time. So that's where we have put our fingers that by 2028, at least Coal India should be able to achieve the 1 billion ton, while we will see a significant ramp up in the production from captive mines. And we at Adani itself are MDO for more than 10 such mines. So we are pretty sure that how much coal we are going to put in market through our MDO contracts. However, still, all these projections are apart. There are substantial challenges which industry faces, especially around the land and R&R activity. And that is the biggest, I would say, hurdle and the factor which can delay the production as well as increase the cost substantially. And all my co-panelists would also agree that land acquisition R&R has been one of the most costly and tedious activity in recent time. Other than that, there are fine regulatory approvals, challenges are there. Financing for coal project has become challenging nowadays. So we are also trying to find ways to get the financing. So these are some of the areas which need to be looked at, worked upon, and government need to work with industry on land arena activities to ensure that we meet the objectives of Atmanirbhar Bharat and get the sufficient domestic production on stream. Monica, happy to take any questions, etc. This is what I had to add, that immediate 22, 21, 22, we see normal growth, but after 23, 24, till 27, 28, I see that new projects would come on stream and substantial capacity addition would be there.
Absolutely. Thank you so much, Pukhraj, for giving us a scenario on coal. Now I will start a little questions. We have about 5 minutes to go. So I will start with Arnab ji. Arnab ji, I have a question for you. So every day we are seeing in the news about various predictions of GDP and India growing at a good rate, steel industry witnessing a V-shaped recovery. So increasing steel prices, is it a indication of recovery? Do you think so? Arnab ji, please unmute your mic.
As I said, it will be more of a short-term answer. If we just go by the data of September and October, definitely it shows a V-shaped recovery. If we are to really make a judgment, we have to see at least 3 more months data. But the feel is that we will still be negative in this December quarter, but we actually might be positive in the January to March quarter. That's based on 2 assumptions. A, that some of the momentum is at least is sustained. And 2, at least 10 days of March had gone off last year. So, which means that the base would be a little lower. And the final assumption is that there is no relapse of cases, no new wave of cases. So no new fresh lockdowns. So that's on the economic front. Steel prices, as I see more of the long markets recovering faster. The flat market has done well in the last 2, 3, 4 months. It will do well for maybe another couple of months. But thereafter, going forward, I feel the long market might do a shade better than the flat market for the simple reason that consumer durables, auto sector, and the 2 major sectors that buys flat is still based on those assumptions that it is recovery or it is pent-up demand. So, but the construction coming from a low base definitely is going to go forward, and the government is going to put money in infrastructure. So definitely that is a sector that is.
Right, sir. Sharad sir, I have a question for you. Currently, Indian steel prices are nearly same as July 2018. If we really see July 2018 levels, whereas iron ore prices are almost doubled, and it may increase further. Do you see more upside in steel prices?
Yeah, Monica, again, this is a question, as I said, that giving a forward outlook for steel price on a single factor is always difficult. It is generally, yes, ideally, it has to move in a straight line. But if we go back, what we witnessed, a similar kind, or maybe much more faster and in an increased shorter period, if we remember 2008, what we have witnessed. We need to remember what was the prices, international prices for hot rolled went crossed to $1,250. And in terms of the maybe iron ore, it was in the range of maybe $135, $140, or sorry, $200. So if we compare that ratio in dollar terms, today, the prices are, say, in the range of $675 to $700 internationally, barring US, which is an exception. And iron ore prices in the range of maybe $128, $130. So you understand that iron ore prices are there, but the impact of rupee devaluation, if you compare. So there is definitely, if you have to compare like to like, whether 2018 or whether 2008, definitely there is an upside. But as I told you that the price increase is a mix of demand, international prices, raw material. So saying that, identifying, pinpointing one particular reason and saying for steel price is a challenge. It's difficult.
Yeah.
But yes, there is no reason for the prices not to remain at these levels or move up until and unless something significant happens in raw material.
So I want to ask another thing: is there a price gap between primary and secondary steel producers in the country today, and do you see the gap widening further?
See, the thing is that if you see whatever the gap is, normally which is there, it is slightly more today. But the way it has been pointed out in one of the presentations I was seeing through, that almost 40% of the produces through the secondary producers, and with the raw material prices going up significantly. And for them, we have to remember that to control the cost, it is very, very difficult. So it has to move in line with what the raw material price movement is there, even for the secondary producer. So I don't see any significant change between the price gaps between this. And also one more thing we have to remember, even for the steel production through the blast furnace, more than 60% of the production comes from smaller blast furnaces, small size blast furnaces which are old, which adds a significantly higher to the, if we talk the global benchmarks or some of the organization companies in India within the country with larger blast furnace, the cost factor for them is much more when the raw material prices go up because of the size of the blast furnace where the costs are high. So all those factors put together, these smaller blast furnaces contributing to more than 60% of the production where the costs are high, and 40% of the secondary producers where the raw material directly has a significant impact. So overall, I think the movement will be in line, whether it's a primary producer or secondary, gaps will be more or less same, slight temporary here, maybe up and down in the price gap.
Right. We have a question from Mr. Sambit Das. He's asking from Mr. Praveen. His question is, Praveen ji, longs have seen a rate increase due to iron ore price rising. Do you think when rural market under pressure, real estate struggling and highway facing fund crises, these rates will sustain? Will price sustain once iron ore mines open up and the material is available?
Yeah, so is the question that prices will remain at this level? Sustain means that?
Yes, so his question is, do you think when the rural market is right now under pressure, real estate is struggling, when the mines will open up, do you think the prices will change and with the availability of material increasing in the market?
So exactly what I mentioned earlier, this is a classical demand supply gap. Currently, in some of the segments, even though we have reached about 85-90% of our capacity utilization of normal levels, in some of the segments, we are struggling to meet the demand of the customers, specifically say in automotive, in two-wheelers, where the production steep jump has been so high that we have not been able to meet up the requirement. But in some of the other segments like real estate, Mr. Sandeep has mentioned, obviously the demand is yet to pick up. So currently the capacities are getting diverted elsewhere. So keeping the raw material aside, once there's a balance between demand and supply, the prices will stabilize. I think all of us want in the longer run, at least for a 3, 6, 8 months period, the prices should stabilize. Unfortunately, it doesn't happen so often because, as Mr. Mahendra was mentioning, there are so many factors which impact the pricing. But ideally, we would like the prices to stabilize at a certain level where we know that means the demand is stable and the raw material prices are also stable. There is raw material I'm not touching just now. But if demand is stable, then it helps us to meet the customer demand. I think for us, most important thing is how to reach the material to the customer at the right time. I think most of the consumer and consuming segment struggle with that because of high lead times of steel. And a stable demand scenario will help us to forecast, predict, and supply on time.
We have one more question from RINL. So this question is, what is the outlook for demand increase in M&HCV from automobile sector? The sector was waiting for GST rate reduction, which the GST Council doesn't seem to be taking it up. Will the boost in construction and commodity consumption be enough to help the higher demand for M and HCV? This question is from Mr. Vikas K. Gupta, RANL Vizag Steel. Anybody can
I
answer.
just take the Yeah, I'll just make one small point. LCVs markets will recover faster. Last mile connectivity and all. Rural areas, semi-urban areas, they will require more of LCVs. But HCVs and medium-sized commercial vehicles, they have a very bad year ahead. And the headwinds that are there is not just because of COVID, it has been there before. From axle capacity to leasing to there's overcapacity in that sector. The sector is underutilized given the kind of fleets that have been acquired. So new demand for HCVs and LCVs will, I mean, the estimate is it will be down by more than 20-25% in 2021.
We have one more question from Mr. Abhijit Mishra. He's asking, the pandemic showed that rural market are more immune to such shock than urban market, and with the new work from home phenomenon, the steel demand will move towards tier 2 and tier 3 cities. What kind of change in strategies steel manufacturers will need to address this shift in demand? Anybody can answer.
Yeah, Monica. Monica, I'll just speak on this.
Sure.
See, definitely this is an observation which is absolutely, we feel that this is to the point. Urbanization in the country we have been witnessing, but the pace of urbanization now with more of the people focusing in the rural and semi-urban is definitely going to take place at a much faster rate. And it is very important for us to ensure that the companies, especially the steel companies, have to ensure the reach in the rural, deep rural, and maybe the semi-urban markets to ensure that the products are easily available in the form in which it is required to a large extent. Because for them to get a processed material in the shape it is required in rural, getting it done somewhere. So the key will be to ensure the availability of the material and to ensure the reach. And this is one of the major strategy which the organized steel industry as an industry, I think definitely will be focusing. And also focusing on MSMEs also is a part of this strategy, that MSMEs reach is significant to cater to the rural and semi-urban requirement. And it is important to take care of the business of MSMEs. So that step is in this direction, and we are confident that this strategy is going to help in ensuring a faster build-up and urbanization in the rural and semi-urban areas.
So this is absolutely true, because even in my previous webinars, we had this observation that now the development is moving to 2 tier and 3 tier cities because of this work from home culture, and many of the organizations have actually allowed their people to work from home. So I believe now the development we will be soon going to see in 2 tier, 3 tier cities.
Yeah. And one more thing to add, which is going to add to that, maybe after interacting with these online organized platforms, like whether Amazon we talk, or Flipkart or any other, they have also know that now it is the time when people moving out is going to be restricted, because people have the Indian psychology has been that till I touch and feel. Normally, we as Indians have not believed in buying any significant or making any significant investment. Going to the shopping mall, touching the refrigerator, and then buying, or touching and seeing the maybe the television and then buying. But now this last 1 year almost now has taught us, and has the majority of the Indian population has experienced that online also is equally safe, more cost efficient. So I think that is somewhere, though that infrastructure is to be created, the penetration of these online platforms into rural is very, very limited today also. So that also
yeah,
a major thing.
Absolutely right.
So infrastructure is going to develop in tier 2, tier 3 cities.
In fact,
for
now
the-
steel industry is also moving on to Shopee concept. We have seen JSW Shopee, ArcelorMittal has also gone into Shopee. JSPL is also soon planning and RANL also planning. We will take one or two questions more. We have this question for coal prices. This is from Mr. Gedappa Kesapur. He's asking coal prices too started to raise sharply from last 10 days. Whether this will rise into 2021 first quarter or decline. Pukhraj ji, if you like to comment on coal prices. Pukhraj ji, or anybody can comment. Mr. Bidyut, you like to comment on coal prices?
Sure. So I guess the question is more on the thermal coal side and not on the coking coal, because coking coal is anyway, I mean, our dependence is on Australia and other rather than any domestic sources to be significant amount to be available. So as far as thermal coal prices are concerned, I think we are still to recover from the power demand side, okay, which is the key consumer for thermal coal. So if you look at the electricity demand that the graph over the last few months, there has been a dip, okay. So unless that graph goes towards, if not the zenith, but towards an upward trend, we are not going to see a significant uptick in demand of coal, okay. So essentially, even if you increase the price on the auctions, okay, you're not going to get a very, very positive response from the marketplace. Okay. So talking about the next 3-4 months within this financial year and maybe of Q1 and Q2 of next, I don't foresee any significant rise in prices, and that is going to happen. Be it the subsidiaries of Coal India or other commercial miners, I don't think they have the margin of error to play in order to increase the price and still remain a key player in the marketplace. So I don't think it is in.
So before I like to launch one more poll to you audience. This poll is on your screen. Do you think government should interfere in domestic commodity prices? Please vote. Do you think government should interfere in domestic commodity prices? This question is extremely important from the point of view of private or PSU's pricing mechanisms. Do you think government should interfere in domestic commodity prices? I request you all to vote to the maximum. So I'm sort of getting a mixed view. I will only...
Monica,
Yeah.
the point is that the interference has already been observed, be it through the National Coal Index, when this recent coal block auctions happened, and the proposed National Mineral Index, and that anyway we are debating upon on the proposed mineral sector reforms. So I think in order to get a fair play, and in order to create a real commercial mining market, be it for coal or other minerals, we need to quicker we can leave it to the market forces to derive the prices, the better it is. Instead
well, we
of
have the answer. I think it is a mixed view. 50% people feel yes, government should interfere. 45% people feel no. So we have the answer. And one more question I like to put up, and then we will close it down. On your screen, do you think price index is necessary for Indian steel market like LME in metals? Audience, please vote. Do you think we need a price index? It is important for Indian steel market like LME in metals. क्या हमें price index की जरूरत है for steel? Okay, a lot of people are voting now. I think the subject is very exciting to people. A lot of people are voting. Okay, let me show you the results. So here are the results. 80% people feel that we should have a price index for steel, like LME in metals. 14% feels no, 6% feels maybe. Anyone like to comment on this?
I think it is important to have a platform in place, whether you call it a steel mandi, you call it a steel trading platform, or whatever it is. I think a little bit of visibility of what's happening, what are the real prices of TMT, real prices of billets that's happening at different clusters within a state or within a specific region. Very important to know that. Especially this is critical if the secondary steel sector players need to fight against the majors and still stay in the marketplace, when the quality aspect will become very, very important. So far, it is everything is sold, whatever is produced kind. But when there will be enormous focus on quality of steel and people will be able to differentiate, when secondary players will also have to up their game in terms of quality in order to stay in the marketplace and fight against the majors, you need a platform like this so that there is a visibility and accordingly you can step.
I think it will benefit the consumers. Today, often steel industries are blamed of from transparency point of view. If a good index is available, which is I don't know whether it is driven by government or a creditable agency, then the transparency will come in the system, and I think it will be more beneficial for the consuming segment that they can relate to what and a lot of factors that we spoke about obviously will become part of as an input to that index. So I think the audience result is very, very clear. It's a step that we must take, and it's an indication of a mature market that if you are having an index for a particular commodity.
Yeah, I agree.
Yeah.
That poll result was very encouraging for us to see. For the benefit of the sector.
Pukhraj, we were calling out for your name. I think you were busy that time. So we had a question for you, which Bidyut ji has answered. So maybe I can take up one question for you, and then we are already over the time, and then we will be ending the webinar. So this one question is for you, Pukhraj ji. Yeah. So coking coal prices are the only blessing today for the steel industry, as it dropped from USD 250 per ton to 110 today. Do you see these prices going up in near future following steel? Pukhraj ji.
So where I see, while we may not see the price level of again 200 or 200 plus USD, but I see at least it will again farm up to $120, $130 at least. That's where I see.
Okay. So with this audience, we are ending the session. Thank you for participating. We are already over 18 minutes. With this, I would like to thank our expert panelists for taking out time for us, and to our lovely audience who never fails to make any session interesting by putting up great questions. Once again, thank you to our sponsors, Radha TMT and MSP TMT Bars. It is our sponsors who are keeping us alive. And with this, I'd like to thank Mr. Arnab Hazra, Deputy Secretary General, Indian Steel Association, Mr. Sharad Mahendra, CEO, JSW Steel Color Coated Products, Mr. Praveen Shrivastava, Chief of Sales and Marketing Tubes Division, Tata Steel Limited, Mr. Bidyut Chakraborty, Director, Mining and Metals at KPMG, and Mr. Pukhraj Sethiya, Associate VP, BD Mining, Adani Enterprises Limited. Thank you so much, viewers. We will meet again on 15th.
Thanks to you, Monica, also.
We will meet
Monica.
again on 15th on
Thank you,
our next
Monica.
webinar on color coated steel. Thank you so much.
Thank
Thank
you,
you.
Monica. Thank you.
Bye.
मजबूत घर की असली पहचान उसकी अंदरूनी ताकत होती है। इसीलिए इस्तेमाल करें MSP TMT बार, जिसकी अत्याधुनिक रिप फॉर्मेट कंक्रीट को जोड़े रखे सालों साल। तो घर बनाएं सिर्फ MSP TMT बार से और घर को कहे जुग जुग जियो।
राधा 550 स्टील TMT महाशक्तिशाली।
मजबूत घर की असली पहचान उसकी अंदरूनी ताकत होती है। इसीलिए इस्तेमाल करें MSP TMT बार, जिसकी अत्याधुनिक रिप फॉर्मेट कंक्रीट को जोड़े रखे सालों साल। तो घर बनाएं सिर्फ MSP TMT बार से और घर को कहे जुग जुग जियो।
राधा 550 स्टील TMT महाशक्तिशाली।